Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 8th of January. Now, before I sort of whip through the markets, just want to wish everyone the best of luck this year. Things are looking pretty good, right? We've got the central banks. It's a bit of toing and froing, but a lot of them on the back foot. Higher interest rates are squeezing a lot of these economies. So it's going to be lots of activity, right? When the central banks are in play telling us what's happening, that's when we can start to pick the eyes out of the market. All right, now for those traders who were active over the sort of Christmas through New Year's up till now, you know what? You probably haven't seen a lot of action. I mean, there's been a few moves, and I haven't really adjusted these charts at all. Dollar index, yep, dipped down. It's back up to 103. A little bit of consolidation, I guess, on the dollar. As you can see, dollar yen, dollar Swiss, dollar CAD sort of coming back, and a little bit of a slight retraction there on euro, sterling, Aussie, Kiwi. And that sort of comes back down to last week's data, right? There was a few people sort of punting or trading their non-farm payrolls, but not a hell of a lot to really rip your teeth into. But this is where the market starts, right? This is my 36th year of trading, and I can tell you when you get into the banks at the start of January, everyone dust off the cobwebs. You've usually got new budgets for the year. So you work out your sort of profit goals, your trade plans, and these sorts of things. And then you come back and then start to go through your charts and just start working out where support and resistance is, and give yourselves a day or two, if not the week, to really start to feel what's happening in the market. Okay. Now, to jump ahead with that, right, we can come across here and bring you back to the calendar. The easiest thing to do is to reconnect to the market is actually have a look at what happened last week, right? I know last week was the first week of the month, but this is where trading will start. Liquidity will come back online this week as all the bankers come into it. So, you know, there's a bunch of data coming out here, sort of top tier and some good second tier numbers last week. But Friday, we did see the non-farm payrolls. Okay, they came through, and I'm surprised. I know the dollar came back, but it sort of hasn't really gone on with it. Maybe a lack of liquidity, but the US numbers here were really much better than expected, right? 216 versus 170. The unemployment rate went down slightly, and average earnings were up. So that's something to really keep a note on, right? It's gives you some idea of what's happening in the US. The Canada, an improved unemployment rate, but full-time employment, not quite as much as it was. So dollar CAD sort of whipped around. Obviously, with the non-farms and Canadian employment numbers, bit of a quagmire of activity there can lead to a bit of a discombobulation. Inflation in the Eurozone, well, year on year, slightly lower, but nothing really to write home about. Okay, so and that's where we are. Like, you look at those numbers and you think, righto, I can sort of get a bit of an idea of what's happening there. But you look at your charts. The next part I would be really looking at closely is the general markets themselves, right? Then, 1 week percentage, equities down last week. Okay. Month to date, year to date. I know it's only been like a week, but that's what we're dealing with. The one standout here to me is, okay, sterling is up, right? So I can see out of all the currencies, the dollar is actually doing quite well against everything. And you'd expect that with last Friday's non-farm payrolls. But as the markets reconnect in Asia, start of the year, it's going to take a few days for the market to really be confident to sort of sink their teeth into some trading opportunities. When I look at these charts and I look at the sterling, I'm like, okay, I can see sterling's doing something a little bit different to everything else. I would go researching and try and work out what it is that is really giving sterling a bit of sunshine, right? If I actually just get my pen up, there we go. So looking at that, there's a slump for the UK builders eases in December on rate cut hopes, right? I was just looking at this and sort of scratching my head. Now let me just show you these numbers, because this is where you got to work out as you get a bit more experience whether the new services are actually just coming up with a bit of fanfare just to fill the pages. So the S&P Global Construction PMI for the UK, 46.8 versus the forecast of 46. Now, that doesn't seem like a slump is over, right? It's not like a massive gain. So whether the UK market, sterling market, was really weak in the lead up to this, but I don't really follow that news and think that that's worthy of following through. Sterling has bounced. Market was short. So you know what? That's all it is, right? There's nothing. What I'm trying to say is there's nothing to hang your hat on. So as I sort of start to reconnect with the market, and I haven't really looked at the markets at all. I mean, I've looked at where various currencies are just by habit over the break, but I haven't really gone into it. I want to give myself like complete refresh. With that, you lose a bit of touch with what's happening in the market, but that's where the data comes in this week. We can start to piece it together and start to think about what the Fed are doing, right? If we understand what the Fed's doing, then we can understand what the rest of the central banks are doing as well. And that may take a week of data, but this week it won't take too long because we do have the US inflation numbers on Thursday, right? Or Wednesday in the US, Thursday in the US. So that's going to give us a very big look into Pandora's box, see what's happening with the US market, and that should filter through the markets. This should be really your overall starting point for the week. Okay, it's a great number to be sort of get a good gauge of what's happening in the US economy, and then we'll start to hear a few comments from the Federal Reserve as well. Now, leading into this, don't get me wrong, there's some good numbers coming out, economic sentiment numbers, retail sales in the Eurozone, retail sales in Australia, industrial production in Germany. So there's numbers coming out, but what we're looking for is, okay, where's that overall market sentiment, right? It's a little bit tricky, but once you come into the US CPI numbers, we should have a very good gauge of what's happening there on those numbers, right? Actually, I've got my calendar set here to pick up a few other things as well. The inflation numbers Friday, Aussie Kiwi, right? You want to start to see what's impacting what, where the correlations are, and get an overall feel for what's happening in the market, right? Right now, I feel a little bit sort of underprepared, and that's only because I haven't actually been in front of the screens. But as I said, if you start to go through your charts, right, and start to update a few of these things, you will start to get a good idea. Like all you have to do is redraw your trend lines, work out where the various instruments are, whether they're against the dollar or the crosses, and then you can start to piece together some good trading opportunities. As I said, this week's US CPI numbers gives us a great chance to reset very quickly, get an idea, get into the groove, and then start to roll out some good trades from there. All right, guys, that's it. I mean, there's not much more to tell you really, because it's, as I said, it's like, you know, the first day of school. You got to meet a few new friends, see who your teachers are, see the lay of the land, and then sort of work it out from there. And that's pretty much all we've got to do just now. But I can tell you what, as we go through this week, there's going to be a lot more anticipation around the US inflation numbers, and that'll really bring us back into the markets very quickly. And that's it. As I said at the start, all the best for this year. I hope everyone has a great trading year. And we've got a bunch of rollouts, IT rollouts, screener, new dashboard, and a whole bunch of things coming online. I'll give you updates as they come out. The more updates I seem to give, the slower they come out. So I don't want to sort of jinx myself. Anyway, all the best, guys. Have a great trading year, and I'll see you in the 247 trade zone. Cheerio.